Something I like to point out a lot is it the gold price? Is gold going up in value, or is the fiat currency, the US dollar, is being quoted and going down in value? So I think there's multiple components to it. Obviously, the gold price rising, it means that the dollar is losing value. It's being challenged by the superior money, which is gold. We are led by children. We're led by lunatics. Like, this is not normal behavior. We have a problem and they make the problem bigger. There's no political will. I think it was Doug Casey said, democracy is mob rule dressed up in a dress jacket or something. It's just mob mentality. It's people just trying to vote themselves as much as they can out of the treasury. Today, the people's mentality and the voters and so on, I don't know. I don't have a lot of hope. So the Western investors chasing all this stuff, they're totally oblivious to what gold is saying. It's becoming a bit of a warning signal. I think it's beyond a wake-up call at this point for the West that we need to change our ways and fix things, because the route we're heading, it's not looking so great.
Welcome back to the Gold Exchange podcast. I'm joined by my good friend Peter Spina. Peter is the CEO of GoldSeek and SilverSeek.com and joins us today to talk all things gold, silver, and more. Peter, welcome to the show.
Thanks for having me on, Ben.
Peter, I want to start. We've seen a massive run up in gold prices. Obviously, there's going to be some level of volatility. There's going to be some corrections. But do you think that the argument for gold has changed at all? Are we in a bull run in gold, or is something different going on?
Well, that's something I like to point out a lot is it the gold price? Is gold going up in value, or is the fiat currency, the US dollar, is being quoted and going down in value? So I think there's multiple components to it. Obviously, the gold price rising, it means that the dollar is losing value. It's being challenged by the superior money, which is gold. I don't believe the dollar is money. It's a currency. It's a fiat currency that's backed by trust and faith in the system. And also the gold price is reflecting the trust and faith in the system. So the gold price is indicating that it's losing trust and faith in the system. And even more so, it's people, there's other trends going on. We think we'll talk about it, but yeah, that's people are looking to get out of the dollar, and there's not many good alternatives out there to choose from. So gold being the money, the historical money, the go-to safe haven asset and everything, that's reflecting it. But it's a reflection of confidence, trust, the value of the currency. So many different inputs are coming into it from all around the world and into this market to determine its price.
I want to talk about first one of these inputs, which is a weaker dollar. So a lot of people said, oh, Trump is going to weaken the dollar. This is going to, change American manufacturing competitiveness. But in general, what do you think of this stance of we need a weaker dollar in this country? And what does that mean for gold prices?
Well, a weaker dollar would encourage more manufacturing if it fell significantly amount to offset what the competitive cost of you look around, say at China and these tariffs that they're talking about, you would need a couple 100% tariffs at least to start to even it out. This is not something that is that easy to do, to return all this manufacturing base. It's investment, capital investments, but also just being competitive in the global marketplace. So labor costs, all sorts of costs in the U.S. are significantly more higher than other parts of the world. To encourage this and to do this is going to take a lot of different things. I just don't think that all the ingredients are there for this right now. And at the same time, there's other questions to be had. Say, what are you going to do if you don't have a labor force that's willing to work? And there's a big problem on that side as well. And boy, it's not an easy thing to do. But what made the dollar, the imperial dollar, so powerful, after World War II and so on, has been kind of this globalization trend. The more that the world connects, the more the world trades. They've been using the U.S. dollar, which has been the kind of, I call it the king currency, the supreme currency at the moment, because that's what everyone uses to trade goods and services and so on around the world. But obviously things haven't changed. Things have been changing for many years. This is not something the last year or two, but definitely in 2022, when I really kind of consider it to be kind of World War III. The colder war is what some like Gorbachev is talking about, calling it. The world is starting to go into a new trend. And after 2022, when the war, I wouldn't really call it a proxy war with Ukraine. It's actually the kind of the West fighting Russia in Ukraine. This is a major superpower. The West, regardless of your views, what happened was they got their assets frozen. Their dollars were frozen. $300 billion of the central bank dollars were frozen. It's all electronic, except for, if I recall correctly, I think they had $10-15 billion worth of cash. So they can't, they had that in the country. They can't, confiscate that. But if, you're part of the SWIFT system, they cut you off of that. So you can't send money around, and then it's all electronic, so on. So that was a clear signal that all of a sudden the dollar was weaponized. If you don't do what the U.S. wants you to do, then they'll use this as a weapon. And that really started to set things off. And of course, the politics came into play with the elections. With Trump coming back into power, the issue of trade and the trade wars and this trend of deglobalization. So that's just been adding to the pressures on the U.S. dollar. Of course, there's a lot of uncertainty at the moment with the tariffs and what's going on with so many different things. But the underlying driving force for the gold price for many years has been not just a de-dollarization, it has been the amount of debt, the amount of unsustainable debt being added to not just the U.S. side, but all around the world, the whole Western Europe to all around the world. You almost, there's some countries, you look at, actually, I want to say Russia, well, they actually cut down their debt quite a bit over the last decade plus. During 2008 until 2020, Germany did an excellent job of also cutting down their debt, but recently that's been ballooning, and the Western countries are spending more than they're taking in. And I believe it was Milton Friedman or someone made the comments that inflation is a direct result of spending more, the government spending more than it takes in. It's basically got to print its way out of the money that it doesn't have, or the currency doesn't have. So we are at a point where Trump has to come in, and there's been expectations, well, okay, he's going to stabilize things. Okay, maybe we'll get some more manufacturing, so on. Well, the deficits aren't coming down, really. The EC, what's happening, the budget that was passed, that was not something that stabilized the budget. No, we have massive deficits. The deficit continues to increase. All that's happening is hopefully that the rates are coming down because the interest payments are going through the roof. They're over $1 trillion, going to go to $1.5 trillion if these rates sustain. That's what the market senses. They know that this situation is unsustainable, and even if they are successful at bringing down the rates somewhat, you're just manipulating the free market forces, and eventually just breaks, because we should never have gotten to this point in the first place. These are unnatural situations caused by manipulations of the system, of the free market system.
I see a lot of potential drivers for a continued bull run, or maybe even a sharper bull run in gold prices, whether that's lower interest rates because of the power, the need to service debt without, inflating away our currency. Gold might respond to that. It's a monetary factor, right? There's geopolitical risks as well, whether these wars break out, whether the conflict with Russia and Ukraine actually goes broader rather than dies down. So all of these point in a lot of ways, whether it's deglobalization, de-dollarization, fiscal problems, global problems, towards a stronger gold price, a weaker dollar. But what are some objections that you often hear that no, gold isn't a bubble, gold is just a shiny pet rock, there's no point in owning gold, really these currencies are going to be turned around, and we just need to trust that yes, gold isn't a bubble and these currencies are going to stick around? What do you think are some of the strongest arguments against gold?
Well, I started investing in gold as a teenager, following it. So I heard the bottom of the market rhetoric. And I remember clearly listening to Jim Cramer and Kudlow on CNBC when gold was in the 330s. And they said gold will never go above $360 an ounce. It's a barbaric metal. This is a new era. We have all these intelligent PhDs, in the central banks around the world. And we figured it out. Unfortunately, human nature, as much as we think we are civilized, we're very animalistic in many ways. And when you are unable to even, the arguments of there's some of the arguments that are being made is, crypto now saying that's the new version of gold, digital gold, which we can talk about that later. So there's other alternatives saying, okay, well, gold has been around, but now we have in digital age and so other things to invest in. And then the other arguments were before were, well, you have other currencies. So if the dollar's going to have issues, you can go to the euro, you can go to the Chinese yuan, there's other alternatives, but there really isn't. There really isn't any good alternatives. Warren Buffett talked about gold being, there's no yield on gold. Sure, maybe there is a yield on gold if you do it properly, but traditionally you hold gold, you're not getting a yield on it. I understand that's gold shouldn't be producing yield because you can't create something from that like you can with dollars and credits and fiat currency systems. But if you look at it from his perspective, where he's investing into treasury bonds and all these things, like I can get 3, 4, 5%. I can invest in these productive companies, but history hasn't really shown that to be accurate way of outperforming gold, because gold has outperformed all of these whether it's holding S&P 500 companies since the year 2000 for 25 years, gold has outperformed that. So there's an underlying problem. It's a debasement of the value of the currency, and gold is reflecting that. And it's really it's amazing that the gold price has been running up without creating any real problems in the system for quite a while, and everything, dollar's still supreme currency internationally and so on. But a lot of that things are changing. So I think a lot of people are saying, well, yeah, it's Pax Americana, the dollar is, you can't, the dollar's not going to go anywhere, the blah, blah, blah. Well, there's a lot of things happening in the world. There's a lot of challenges taking place to the world's superpower status. And if you do travel to other parts of the world, you do see that, there's a lot of people hungry who want to also be on the top.
Peter, I do want to ask you about your global perspective, your global viewpoint. You've been and lived in multiple different countries. You've seen the different attitudes towards gold and towards other currencies. What do you think something is missing when it comes to understanding gold in the United States, or understanding how the rest of the world feels about the United States and their monetary policy?
Yeah, it's hard to understand that unless you really start to travel and to see it from different perspectives. When I've only been to Asia once, but it was eye-opening. You really see this energy, the growth, the hunger. The people are they're hustling and bustling, and there's entrepreneurs, and it's an energy that I actually see similarly here in Eastern Europe after the fall of communism. People want a better lives. They have to work hard for it because they're coming from difficult positions. I was born in the United States. I was born in the 80s, where things as easy as it gets. We've had incredible lifestyles, but that's been built having the US dollar as a supreme currency. We've been living off the world savings for a long time. 80, 90% of the world's savings is going back. The world is producing all these goods. The US is exporting dollars in debt, and the world takes that, and that's been going on and on and on. Well, it's nice to be a consumer society and be able to get away with this, but eventually things get, trade balances and things get really out of whack. But yeah, when you see the rest of the world is happening right now, there's a lot of savings being produced in places like China. They're working their butts off. They're manufacturing and producing products for us. You say what you want about the policies of the Communist Party, their party there. But they are so much, in so many ways, they're so advanced and ahead of us. They're trying hard to take away what we have in many ways. It's a competitive nature. And even in the gold market, that's where the gold demand is. You see it in the younger generations. The biggest consumer of gold in China is going from 25 to 35-year-olds. Soon it's going to be under 25-year-olds. 2 out of 3 Chinese who are under 25 own gold. Generation Z in the US, it's like 16%, which is higher than the average, which is 11%. So there is a little bit of shift in the younger generation. You don't really think you would see that, but there is a bit of a shift there, a little bit in the West. But for the most part, you see the traditions and the history that these people come from. Like from my parents, they escaped the communist system. They understand what the black market's about, how the currency was manipulated, how you would go here, and if you had dollars, you could get a much better exchange exchange rate than if you use the official system. And then you go back, next door is Germany, the Weimar Republic. People lost everything. Hyperinflation. You have, nearby Serbia, Yugoslavia. In the 90s, that was even more vicious. You blinked in the morning, things were 2-3 times as much in the evening by the time you went to the grocery store. It was just, living in the best country, one of the best countries in the world, the United States, you kind of think, oh, everything is fine, everything is good. We've moved beyond these issues. We've learned from the past and so on. But unfortunately, I don't think we have. So yeah, the rest of the world is hungry. It wants to compete with us. And gold is a global, everyone around the world understands gold. There's 4,000 or 5,000 cultures in India, and they all have affinity for gold. Chinese see gold as multi-generational wealth. They hand it down to the next generation. It's not a short-term speculative investment for them. This is way you store your wealth long-term. So there's a lot, and these are the economies that are growing, and you see the demand coming not just to gold and to silver. That's where the energy is. That's where the money is. That's what's starting to set the price more and more. So I think I think it's beyond a wake up call at this point for the West that we need to change our ways and fix things, because the route we're heading, it's not looking so great.
What do you think is going to be one of those wake up call moments for the West? Is it that maybe a treasury auction goes where, listen, they can print the money, but they basically default, or maybe they change the rules of what it means to own a treasury? Yeah, instead of paying in 1 year, maybe we'll pay in 2 years, right? What do you think is that specific moment that might happen, whether it's a spike in inflation, whether it's Powell being fired? Is there some specific moment that you think will make people in the West go, you know what, I know it's a shiny pet rock, but it's worked for 5,000 years? Or do you think that it's going to be a multiplicity of factors where Powell steps down, there's higher inflation, a treasury bond goes awkward, the cent quits? Do you think it's a multifactorial issue that'll get people to wake up to gold, and it'll happen slowly over time, more gradually? Or do you think there's some specific shock to the system that makes people in the West go, I think it's time to check out gold again?
Well, there's a little bit of that shock going on right now, but for the average person, right now, the average Bank of America client has 0.5% of their portfolio invested in gold. It's nothing compared to the rest of the world. I think when the price of bread and circuses go up, when inflation hits the consumer, where they're most focused on right now, they're going to start to revolt. And I see more and more, talking with family back home, talking with friends and family, they are, last year or two, the discussion has mostly been about how expensive things are, that they can't even go out to a restaurant today. Family of 4, it's going to cost hundreds of dollars. The cost of going on vacation, traveling, everything, it's getting, I personally don't understand how most people afford things anymore. On even a $7,500, $100,000 salary for a family, that just seems almost, and depending obviously what part of the country you're in, it's getting more and more difficult. So at first, when they printed all this money, everyone felt wealthy, all this money was circulating around, and the price of the assets continued to rise, and the bubbles kept going. Everyone felt rich. Well, that was short term, because eventually the truth also shows up in the price of things that you need, not the things that you want, the things that you need to survive on, and food inflation and other insurance and all these things they're eating away at the bottom line. So people are starting to ask questions. I think Trump is a reflection of this. They don't understand exactly what's going on, but they're getting angry, so they're revolting politically like this. But yeah, for them to fully understand it, it's going to take an economic crisis at this point. I don't think people are, mainstream media, the education in the universities. We had just talked before this about your experience. My experience back in Colorado with the university professors, they laughed at gold. They said this is a barbaric metal as well. These are the good times. Things are changed. Nothing can go wrong. Their view, their perception just has to change, and I think it's underway. Definitely, an economic crisis is going to wake more people up. They're starting to see what the gold price itself is starting to kind of wake people up. I was shocked. I was talking about this for the last few years. The gold price, last year when it was starting to really break past that $2,000 defined level, it got no press coverage. We broke past $2,100 an ounce. That was what a 10 decade plus long high, 11, 12 year high to break past. Technically, that's huge. No press. So not until we broke past about 4,000. Oh, okay, what's going on? This has been a stealth gold bull market move. The West has been absent. The Western investor has been chasing so many other AI digital stuff. And this has been this has been driven by other markets around the world. Now, this is where I mentioned this about a year and a half, 2 years ago. The second the Western investor joins the rest of the world in this bull market, then you're going to start to get shortages. You're going to start to get price bidding wars because the inventories are getting very tight, especially at those price levels where obviously gold doesn't have, there's no shortage of gold. There's tons of gold out there, but it just depends at what price you're willing to sell it. In certain markets, there are certain questions of if there's been some shorts in certain markets, especially now we're seeing that in silver. So there's other factors at play that can influence the price. But overall, the rush into gold is just starting in the West. They are so far behind. They just do not understand. It's not taught to us in school. It's not told to us in the media. And usually when you do hear on front page of CNBC, you start to be cautious short term, which is what we should have been doing the last few weeks. But I do not believe that this is a sign of the top at all. It's just a short term, just crowd rushing in, pushing up the price too much. You've got some big players there too. They're shorting this stuff. They're sitting on huge losses, but they know that at the right time they can come in. Short term, there's some games you can play in the paper markets, wipe out some of the speculators, which the leverage holders right now, they're going to learn a bit of lesson what it's like to play with margin in the precious metal sector. It's very volatile at times. Be careful. Don't play with leverage. Accumulate, buy physical. And then, you don't have to worry about this short-term volatility because it can get kind of, especially with the silver side and the gold and silver stocks, the volatility can be quite extreme. So it's a lot more challenging market than other markets if you're a first-time investor. But the first thing to do is always have physical, and then you venture into the other stuff, to the mining stocks if you want. But this is not something that, right now we're talking when there's a big price pullback. I do not think, people are already calling in tops. Well, these are the same people that couldn't even call the bull market when it was starting to happen. So they're clueless to the bigger dynamics that are at play. And I'll join them in calling the price top in gold if we saw some major changes. If we saw the budget get under control, we saw some political sanity, we saw Americans being able to talk to each other maybe once again. That might be a good sign. It's a very contentious period right now. And it's very unfortunate because the gold price is reflecting a lot of issues at hand. And until we see some resolution, I don't think this trend stops.
Well, what's interesting is, at $4,000, I have a lot of reporters in my inbox saying, could you please give a, quote about gold, where there was impossible to find a reporter. You would think they all left the planet at $2,000, which for a lot of people in the gold community was a big, nice round number. And one of the things they were asking, do you think it's possible that gold prices could hit $5,000? And one of the things I said to them was, listen, I don't make price predictions. I'm not in it for the price. I'm in it for, a different thing. But one thing I will say is that there's no logical stopping point for the devaluation of the dollar. It's not as if all of a sudden, at $5,000 gold, it really, bottoms out for the dollar. And that's the way we should be looking at this. What is the value of a dollar? Well, right now it's a certain milligram of gold, and 99% of the dollar's value has been lost compared to gold. And so when you frame it that way, what's the logical stopping point at a nice big round number in gold? Really nothing. And so I guess my question for you is, what do you think of these arguments? Well, we're going to use AI to grow our way out of this, or we're going to use crypto to get rid of the debt. Do you think there's any credence in any of these arguments, which could be a, boon for the dollar and hard for gold?
Yeah, the crypto argument, that's just, it's quite amazing. Some of the extreme predictions being made about how we're going to get out of U.S. national debt and that. What is interesting is, I got into crypto. I got into Bitcoin early on. I really believed in it in 2014, 15, and 16, 17, but then it didn't really turn into a threat or a competitor to to fiat currencies. It doesn't function well, on a high active basis. The network gets clogged up, so on. And then the marketing changed to digital gold, so on. But what's interesting about it now is after, the original core group of people I was with, by the way, we were just hardcore libertarians. anarchists. I was in Prague when I came here in 2015. I spent a year in the Crypto Anarchist Institute. Everything was done in Bitcoin and Litecoin. Every transaction, all these projects, it was pretty neat. Let's building something to fight the system, right? Well, what is it now? It's part of the system. You take your dollars, you go buy your crypto. So you buy some digital dollar, and those digital dollars then go and buy U.S. treasuries. They're funding it. So that's why the system loves it right now. They found a new source to buy U.S. treasuries. I think Tether holds like 130 billion dollars worth of U.S. treasuries. So now they found a way to pump it. It's not a threat to the dollar, by the way, Bitcoin. It's a derivative of the dollar. And there's so much leverage in it too. It could be kind of the black swan event if crypto had a huge, Bitcoin just dropped 70, 80%. Yes, so much leverage in it. It's in everyone's portfolios in the West. And it's the treasury market too. Everything is just embedded more and more and more. So it's kind of interesting to see how that's now. When I was telling people to buy Bitcoin to fight the system, those people were laughing at me. Now those same people are telling you to buy Bitcoin because now we're fighting the system. Blah blah. It's like no. You're just gambling now. You're just gambling on the hope that this becomes a future standard, that it actually will be used. We're not seeing the fundamental support behind this. We're not seeing daily use of Bitcoin. You can't even use it. You have to use another network off chain and then bring it back to settle it, because it just 7 transactions a second. It's not competitive. It's interesting. It's a payment network. It's not digital gold. I call it digital pyrite, because to try to get people to take their gold and buy, dump it and buy Bitcoin. Are you kidding me? That's that phrase, a fool and his money are easily departed. That's what the casino does to you. To me, if you're going to touch that, use speculative money, just like you would with mining, with an exploration stock. I'm not going to put my retirement account into an exploration stock. I might put a small percentage into it, but I know that thing could go down 50, 90, even 100%. People who buy Bitcoin now, no, it's digital gold. It's fine. Oh boy, there's been already multiple huge drawdown events. This thing is highly centralized in its ability to be pumped up in price and so on. So be careful with that. It is not digital gold. It's definitely the narrative is being pumped by CNBC, all these mainstream media in the West mostly, where the rest of the world they're buying gold. They know that this is a Western game, and when things come down to it, I don't think real world producers, commodity exporters are going to take Bitcoin as payment. The thing is volatile. There's nothing backing it. I could even get deeper into some of my views where I don't even think it's an asset. It's an IOU. The only thing Bitcoin can do is give you access to the future use of the network. So to use Bitcoin, the network, you need Bitcoin. But if you buy Bitcoin, do you own any part of the network? No. Do you get a vote on the network changes, on the code changes? No. The miners do. That's all you have is a digital IOU token, which even more so what bothers me is that all these people believe that they're buying something to fight the system when you're using it. On top of that, every transaction goes into a centralized public database. So you are inputting your whole privacy into that. My view is put the government on the blockchain. Force the government institutions, force transparency on them, financial privacy and security. That belongs to the individual. We deserve privacy. To me, dollars, cash is more private than anonymous than Bitcoin. Everything with metadata and all the information with your wallets being registered, it's not hard to figure out who's who. And then governments are going to have access to that. Corporations are going to have access to that. I don't want all my connections. No. Especially with a tyrannical government in charge. Can you imagine if Trudeau had that access? Something like that during the truckers rally? Yeah, he already cut off their bank accounts. So, on one hand, I get it. Having some sort of networks or decentralized networks are good, but to me, Bitcoin isn't the one that protects your privacy and security. So, obviously, there's a lot of debate around that. And again, here's just another example. Is Bitcoin the one that's going to take the lead, or is there going to be something else? Is there going to be Monero? Is there going to be, well, obviously, I don't think the system will allow stuff like that because they want to control and really, Big Brother wants to know everything that's going on. So, the real threats to the system are not, really being pushed. It's the ones that are part of it. So I don't say, the AI bubble. Yeah, the West, there's been so much. I get it. It's new technology. Everyone wants to, be part of it. The Western investor has been chasing bubbles. I think the AI, revolution, there's definitely some interesting parts to it. It's gonna change or transform our lives. It's gonna increase productivity and help out. But there's a lot of excess, and there's gonna be a nasty washout crash coming. A lot of people are gonna get taken for it. Just like with the dot-com bubble in the late 90s. Was that the end of the dot-coms? No, it was a nice opportunity to get rid of the excess. And that's what's needed in any healthy economy. And we never get that in general. The central banks, they come in, okay, let's 2008, let's deal with the excesses. No, let's just make them bigger. It's nuts. It's absolutely nuts. We are led by children. We're led by lunatics. Like, this is not normal behavior. We have a problem and they make the problem bigger. There's no political will. I think it was Doug Casey said, democracy is mob rule dressed up in a dress jacket or something. It's just mob mentality. It's people just trying to vote themselves as much as they can out of the treasury. Today, the people's mentality and the voters and so on, I don't know. I don't have a lot of hope. So the Western investors chasing all this stuff, they're totally oblivious to what gold is saying. It's becoming a bit of a warning signal. It's flashing, red. Now these prices are saying something is really off. So what's coming next? That's what I think people need to prepare for. And obviously there's a lot of debt out there. There's a lot of leverage. There's a lot of misallocation of capital. There's a lot of froth and excess that hasn't been dealt with over many cycles. And I don't know how much longer you keep kicking the can down, but it seems like we're getting to a breaking point. And when things really start to get difficult, which asset class, where do you go for refuge? And obviously gold and silver at the top of that pyramid.
Peter, I want to ask you about silver now. We've discussed a lot about gold, but silver's a slightly different story. Obviously, central banks, they don't tend to own silver. If almost nobody in the West owns gold, they definitely don't own silver. So what do you think is this relationship now between gold and silver? There's a historic ratio between gold prices and silver prices that has in some ways broken down or has gotten kind of out of whack. What do you think about this relationship between gold and silver? Do you still think that they're both monetary metals? We should think about gold and silver in the same way as money? Or do you think that slowly gold and silver are coming apart and they're going to have a different story going forward?
Well, a lot of people have, even in the gold realm, have suggested silver is no longer money. But there's a lot of people around the world that still believe so. So it's a challenge of beliefs and culture. There's a lot of people who won't go for it, but it's still a very scarce, precious metal. It has monetary attributes. It has been money before. It is money to a lot of people. And as the price of gold goes a lot higher, all of a sudden, just like we have seen in history, you want to go for the thing that still hasn't gone up in value. It's cheap, that's scarce, that's precious. And that's what's happening with silver. So yeah, the price, the ratio has been extremely interesting. Silver is a different market. It's 60, I don't know where we're at now, 60 to 70% of it, probably closer to 70% is industrial use. It isn't like gold where when you mine, most of the gold mined is still above ground. A lot of silver then is lost once it's consumed. There isn't huge stockpiles of sitting around in vaults. So it's quite interesting from that perspective. But this is where I love silver. And the ratio from the golden perspective, the ratio is screaming. Silver is an absolutely huge buy here. But fundamentally, the silver market has been going under 4 years. It's going to be the 5th year soon of structural supply deficits. And this is something we've been watching, 10 years ago develop and saying, okay, look at this. Silver's going to finally get going. We're getting close to it. We get to 2020. 2021, 2022, the deficits are getting larger. The vaults and the inventories are going down and the price isn't really reflecting the situation. But now the amount of available inventory is starting to get really tight. The gold price is flying through the roof. Silver demand is starting to kick back on. And a big feature of the silver market was, the amount of sellers over the last year. So a lot of people that I knew in silver went into crypto, went into Bitcoin a decade ago. I also sold some gold and silver way back in 13, 14 to get into it. And then I reversed it and went 100% back into precious metals. But I don't think that that's the case with most of them. They're still stuck in the crypto casino. And a lot of that, former silver investor demand has been diverted into other markets. And it just getting, we saw silver in 3-4 years ago, it ran up to 30, it got smashed. It's just such a discouraging investment. And people just gave up on it, even though the investment thesis, the points were there that silver should be rising. So people gave up, which is a traditional aspect of the bottom of a bear market, just lost faith. And even until the last year or so, it's just like silver, it can't even keep up with gold. It's falling behind the gold rise. What's happening? Supply deficit, so on. So one of the big features over the last, what are we now? Over the last several months, it's 2002, I think 2001, 2002, we've been seeing just net selling of silver from the silver ETFs. You talk to bullion dealers, 7 to 8 out of their clients that are calling it are sellers. There's no buyers. It's just, they're selling silver below spot. People don't care about it. So the Western silver investor just went totally dead, even with the gold price starting to break out, and just slow. And it wasn't really until the last weeks, it seemed like that started to finally change as we hit $50 an ounce. But that's not the case in all parts of the world, which is even more interesting because in today's world where you have this really small, tiny silver market with all that money floating around, it doesn't take a lot to squeeze a market in short or tight supply. So what appears to have happened now was in this last run-up spike in silver price. Well, it wasn't much of a spike. It ran aggressively. I think if you're going to talk about a spike, we're going to be talking about silver going to $100, $200 an ounce. This is just the start of a spike, in my view. The silver price got noticed how cheap it was in India. The social media influencer saying the same thing like all us gold bugs here in the West. Look at silver, 100 to 1, 90-1 ratio. It's so cheap, so cheap. And then you started to see huge imports coming to India in the spring. It started to hit some pretty big numbers. Also for the manufacturing side, for solar panel use and so on, and just China's just been, just been sucking up all that silver for that use. But now the investor component coming into the market, which has a record industrial demand, oh boy, that's a component for a real silver squeeze. So that's how the last couple of weeks developed. Silver ETF buying in India just went through the roof. All this flood of retail investors, started to develop over the last several months. And then with the gold price now, it got more attention. And then there was a rush into silver. So they ran out of silver in India. They had to cut off investors from the silver ETFs. There's been no access. They had to suspend some silver ETFs. And the other part was there's the silver, when their major refinery for the first time ever in their history had no silver available. So it was a total rush for the silver inventory. They couldn't get any bars, in London. There was no silver for the rest of October or something available for delivery. Not that there was a shortage yet of silver, but the silver is sitting in New York now. And here in London, it's dwindling down quickly. I don't know, it's around 150 million ounces left, maybe. And most of that may have been spoken for. So they're, trying to fly silver back over on cargo flights, which is just becoming chaotic, which is telling us the market is stressed. It cannot manage both a record industrial demand and a rush of silver investors. And the longer that this ratio stays down here, and today, the ratio, we're at 86, 87 right now. We were at 80, under 80 last week. Boys, it just continues. If $49, $50 ounce silver looks extremely cheap. And that's obviously historically a pretty big number. We hit that in 1980 and again in 2011. And now breaking it for the third time. Sure, we may get down to a consolidation phase after this run up in gold and silver down to the 44, 45, maybe a dip below. But I think this is a process that's playing out. We're getting more and more investment from the West now into silver and gold, and this is just going to add more and more pressures. India's on holiday this week; they come back next week. Watch out! I don't see any reason at all to sell any silver. You asked me 5, 6, 7 years ago. I had my limit at what price I would buy silver in the low 30s. Well, I bought some silver low 40s recently for my sons, their longer term kind of holdings. So it's starting to, even from my view, which I know when silver ran up from in 2011 from to 50, almost $50 an ounce, I saw anything beyond 30 at that point as being a bit dangerous because it was the risk reward wasn't there, wasn't as favorable. The production costs were still down in the low teens. Today, the production costs around $25, $30, around $25 an ounce. It's rising, so there's a bit of a cushion there. So it could come back, but I don't think that's going to be the case with the inventory so tight, with record industrial demand. It's the greenest precious metals out there. It's mandated green energy. It's a mandated green energy precious metal. And you see how China and the rest of the world with their solar panel manufacturing and investor demand and other, silver is used in so many different applications. So I'm not worried about it. I think pullbacks are great right now. I can buy some more cheap physical. But for me, the bigger opportunity, I think silver is a bigger opportunity than gold. And gold still has a great opportunity, but the gold and silver stocks are even more interesting at this point. So I tend to find myself putting more capital into that right now.
Peter, as we come towards the end of our interview, I want to hit you with a rapid fire round. So I'll ask you questions from all over the map and you can answer as short or as quick as you want. So let's start here. What do you think something the Eastern world can teach the Western world when it comes to investing? And then vice versa, what's something you think the Western world could teach the Eastern world about investing?
Well, okay, sure. The Eastern world can share their more conservative nature and thinking longer term. I think that's something in the West we're too instant gratification now. I want returns in 3 weeks, 3 months, 6 months. Things take time to play out. And even when you recognize a good investment opportunity, it can take a long time. So you got to be able to have that patience and you got to have longer term thinking. One thing, it depends, I guess, on the culture. I got to say one thing that I love about the West, about the United States particularly, versus some cultures like here in Europe, what America still has and that needs to be kind of adapted by other cultures and countries around the world is this: entrepreneurs are regarded as wonderful people in the West. You take a risk and you fail. You took that risk and you're admired and respected for that. You go to a place like Germany, you took a risk and failed, they're going to mock you for it. It's a really, one thing that the culture in the West, in America particularly, has going for it is that people really want to build things still. There is that energy to be an entrepreneur. And as long as we don't lose that, that's something that the rest of the world needs to understand and learn from more, because I see that actually here in the Czech culture more too. But it's not the same. And in America, it really is, it's amazing kind of aspect of it. So it's something that the rest of the world should, take note of.
All right, here's another one for you, similar angle. So lots of young investors now are interested in cryptocurrencies. They're interested in this whole kind of crypto universe. While a lot of older investors in general are more conservative, they might own gold and silver. So what do you think the gold and silver people can learn from the crypto peeps? And what can our friends in crypto teach us boomers in gold and silver?
Well, I got to correct you on that, because I also was... I believe that was kind of the case. And then actually this morning, I looked up what was the average age of a Bitcoin investor, because I've noticed more and more on Bitcoin Twitter, kind of retirement age individuals. And the average buyer of Bitcoin in the last 2025 was around 45 years old, whereas the average gold and silver buyer is actually a lot younger. So there is a narrative shift. There is that belief that gold and silver is for the older generations. That's definitely not true in Asia, and that's changing also in the West. So I think what's happening now is, like, when I got into crypto and all that stuff, there was no, anyone over 50, 60 years old wasn't in that until maybe 5, 6 years ago. They started to kind of get more introduced to it, and the ETFs came around, and then you have, Michael Saylor and these guys that are pushing it. It sounds so wonderful when you describe the moon and how far away it is and how much fun it is going to be to get there. But it's not all that easy. If making money was that easy, everyone would be a billionaire. So everyone's looking to the past as they're, looking to rear view mirror, saying, "Oh, look, I can make all this money in crypto and Bitcoin." Well, that's not the case. There's cycles. And to me, when I see And I know that from experience. I lost a lot of money in altcoins. I invested in so many different projects with this, idealism, belief that these things could change things. Well, these things, a lot of them, they don't have business models. They don't know how to generate revenue or cash. And there's a lot of poor management and outright scammers. There's a lot of shysters there. I hate to say it, but there's a lot of that. Not that you don't find that in any market, everywhere, but there's a higher concentration in that because it's new technology. And I see it also on the exploration side in gold stocks. It's like something that people can't understand technically. It's easy to market to them. They don't want to miss out, so they want to get involved. So it's like, you really shouldn't be investing in things you don't understand. So just don't take, some crypto marketing and put all your money into it thinking, well, they understand what they're saying. Having been involved with this, most of these people, they're diluted by their opinions reflect the current price. And I would be very careful right now. The markets have had a huge run up. Bitcoin could double. I'm not saying that it can't keep running. Obviously, there's having the support of the president and other big players, it's helpful. But the fact is also that the Bitcoin price has not outperformed the gold price in almost 5 years. Since 2021, the Bitcoin to gold ratio has been just hitting a peak. We've hit it like 3-4 times. And then the last week, the uptrend from 2023 broke down. Bitcoin does not look very good to me at this moment. So to those who say, sell your gold and silver and go speculate in Bitcoin, I don't think this is time. I think this is a time to reduce your risks. And it could be a warning sign too. I think Bitcoin is interesting as a liquidity indicator in the markets. It seems to be more correlated to the NASDAQ and NVIDIA and that side. And if that's indicating things are starting to get serious and we see the price of Bitcoin to really start falling, it could be a leading indicator that the general markets are going to start really falling hard. So I would be careful because that could also translate if we have a liquidity event and there's people rushing for dollars and cash, that can easily spill over into precious metals. You may get a deflationary phase before the money printers come in or the currency printers come back in and central banks start to pump the system up. There are signs that liquidity is getting tighter. So there's a lot of triggers out there. There's going to be a credit crisis. There's going to be something that triggers another big event. There's a lot of black swans out there. So boy, it's not an easy thing to navigate through. I do not believe gold investors should be looking at crypto and Bitcoin people to help manage their views. Let's have a nice discussion and so on. Maybe we're not very good at, discussing, both sides are kind of yelling at each other. And that's not good too, because there's a lot of similarity of beliefs. It's just, one side sees this as being the future, the other side isn't. So I think to be conservative and safe, you go with what history shows you to be the safe haven. I wrote before that, you don't buy gold to make money. You buy gold to prevent losing money. You try to save your wealth in there. And when there's a fiat currency crisis, which is inevitable, the devaluation trend continues under these circumstances. Gold and silver are the easiest ways to deal with that. I'm not looking to take on a lot of risks. I take exploration stocks and gold stocks on for higher risk reward and to make money, but gold and silver are there to protect me. And I don't think anything else can match that.
Okay, next rapid fire question for you. Why do you think there's been recently a sort of disconnect between mining stocks or mining equities and the straight up gold price or the straight up spot price of silver? There's been some catch up, but in some points it feels like the gold price is in a bull market and the miners are looking around like, oh yeah, gold price is going up. So why do you think there's been such a disconnect?
Well, I like to look at the gold silver ratio to see what the gold stocks, silver stocks enthusiasm looks like. So when you see the gold silver ratio this week, it kind of represents the retail crowd and the investment side into the gold silver stocks. They're weak. There's not a lot of interest. Like I said earlier, the mass majority of people calling their bullion dealers last years were net sellers. So they haven't noticed the how much money these gold miners are making. We've got Newmont later this week reporting profits. They're going to be huge. They're going to be monstrous profits. So yeah, it's discouraging. It's volatile, but to me, it's like buying, getting some of the gold miners now. It's like buying gold at $2,000 an ounce. You're getting in before the run up. I mean, they have run up. So you have to be careful, obviously, on short term. pullbacks. But overall, as far as the amount of money they're generating, the gold price to their share ratios, it is looking extremely cheap. They are going to get noticed more and more. And as I think we see the silver price break well past $50 an ounce and that excitement coming in from the Western investor, they're going to jump into gold and silver stocks as well. And at the same time, you just give the coming 3, 4, 5, 2-3 quarters of earnings to pass, and you'll see the banking analysts, they'll be upgrading their targets big time.
Okay, next question for you. You have young kids. What's a lesson that you would hope that you can teach them that they'll remember, whether it's about life or investing in general?
Well, nothing is for free in life. You have to work for it. I know that there's a cultural thing, just give me kind of a handout mentality. But what's gonna make you succeed and happy in life is working hard, working for something and not just getting things, trying to get things for free. To be conservative, to invest for the long term. And not to abandon your values. I think in today's world, a lot of people like to abandon their old, their traditional values, and that traditionally happens when you're in bubbles and you're getting diluted by all the easy money and easy credit floating around you. So learn from your history. It doesn't repeat itself exactly, but it does rhyme. Listen to your parents a little bit more.
Well, I think they're a bit too young to watch the Gold Exchange podcast, but when they can't wait for them to watch this episode. Okay, Peter, last question for you. What's a question I should be asking all future guests of the Gold Exchange podcast?
Oh, boy. Well, that's a good question. What would change your view about gold? What would make you actually look at gold and say, hey, this thing is overvalued? Or did we actually become civilized to the point where we don't need gold? At what point do we become a civilized world? I do actually, I do always question my own beliefs. I don't like to get stuck in it because I used to be 100% gold bug, and then I got into the Bitcoin thing, and then I thought that was the future, and then I had to just really question things again and realize that wasn't it. So it's important to question. And so I guess for the gold guys, is like, what could subvert all this? At what point do people have enough of gold and we fix our problems? And at what point do we move on? And at what price level do you just take profits or exchange your gold for something else? Because gold, you do want to, I think I'll always pass down some of it into the future. But if the gold price were to go absurd and it's all about ratio, it's all relative, as they said, right? So if the gold price relative to houses or something is, at what point do you exit the market? Because it's not always like, hodling for life, as they say in Bitcoin. It's not about always hodling. It's about finding opportunities where the markets are disconnected and out of whack. And at what point does the gold market become overvalued? Because I think we've been through decades of it being undervalued. At what point does it become overvalued? And at what point do you start to exit it or reduce your exposure? So that's just off the top of my head.
For those looking to earn a yield on their gold paid in gold, they can check out monetary-metals.com. Peter, where can people find more of you and more of your work?
GoldSeek.com, SilverSeek.com. Active on Twitter or X, and sometimes I go to the gold conferences. So I'll be in Zurich in a couple of weeks at the Precious Metals Summit, and then at the big Vancouver conference in January, the Cambridge House. So hopefully I can see some of you there.
Peter, it's been a pleasure speaking with you, and we'll hope to have you back on soon.
Thank you, Ben. Likewise.